What is going on, investors? Hopefully you guys had a great day out there. Tell you what, it's a lot better even if you own shares of Google or Alphabet. There you have two different ticker symbols, GOOG and GOOGL. I don't really think, some investors won't make arguments why you should buy one versus the other. It doesn't really matter. In my opinion, I own GOOGL, but you buy whichever one you would like. Now, they got a market cap of $1.8 trillion. And I tell you what, today's a really good day. It's even better day if you own Google shares. This thing's up 3% in the after hours. When we get over to the stock chart, I'm going to spoiler alert this one. There is a lot to see here, obviously since October, but there's not a lot to analyze. This is one of the most simple charts I have analyzed. And if you're a fan of the show, every Friday we recap all the FANG stocks, including Google. And this uptrend has been a broken record since October. This has not been broken. It is on an elevator shaft upward. We'll talk about what that means for you, the shareholders. The other thing is we'll jump into the Q2 earnings, which just came out moments ago. Operating income tripled. If you're not sure what operating income is or where to look for it on the balance sheet or in the financials, I'll show you that. We'll show you that in a second here. We'll get over to the numbers. We'll take a look at YouTube, the Google Ad Network, the AdSense business, the cloud business, the other things that they've got going on in Google. Take a look at all those revenues, the profit, the balance sheet, all those things when it comes to Google. Now, the first thing I could do this at the end of the video, but what I first want you just to realize is that there are five, in my opinion, there's other major players, okay? I'm probably leaving people out in this. You can maybe include Microsoft. You can probably include other little smaller companies as well. But there's five major players in the online ad business. Google obviously being the largest, Facebook being right there with them, Snapchat, Twitter, and Pinterest. And I want to take a look at this. This is from a price to sales basis. And I look price to sales because not all these companies make earnings, so you can't necessarily compare them from an earnings basis as well. They're also in different levels of maturity. Some of these companies are old. I don't want to say Google's old, but it's definitely older compared to Facebook and obviously Snapchat and the rest. I want you to show you this. So from a price to sales basis, this is your price that you're paying for every sale over at one of these companies. You're paying 9 times for Google. You're paying 11 times for Facebook. You're paying 34 times for Snapchat. You're paying 12 times for Twitter, and you're paying 24 times for Pinterest. So I just want you to keep that in mind when we jump into the Q2 numbers. Now, on the conference call or in one of the press releases, the CFO did note that the rest of the year might not be as good as this year. So as we go through these numbers, the growth rates, those types of things, they're going to look really impressive. And obviously that's on the backdrop of last year. Everything was shut down. People were really changing their businesses. Some people were starting new businesses. Lots of people were on YouTube, as evidence. If you look at people, people's channels, which including this one, I think I had like 2,000 subscribers this time last year. Now I think we have over 70,000. So those types of things can really grow over the last year in the last environment we had. The CFO is saying, well, look, the rest of the year might not be as easy. We'll see what happens with Google. Now, I tell you what looks easy is this Google search and other went from $21 billion. Our right-hand column is our most recent quarter ended in June 30th, went from $21 billion of revenue on that to nearly $36 billion worth of revenue. Now, this was really impressive. YouTube ads. It might not be impressive if you don't have YouTube Premium, okay? I would watch a ton of stuff on YouTube, some of it entertainment, some of it educational, and I had to get the premium because there's just way too many ads on YouTube. And my apologies if you see way too many ads on YouTube, but YouTube has great control over that. And I tell you what, they're in full control. They went from $3.8 billion to $7 billion in a year on a quarterly basis. Oh my goodness, that is like almost doubling your revenue here on YouTube. On YouTube. They're doubling their revenue, just absolutely fantastic. Now you got Google Network. This is AdSense, those types of things. That business has been disrupted a little bit by the privacy changes you've seen over at Apple iPhone, but we're not really seeing evidence of it. That went from 4.7 billion up to 7.6 billion. All things being considered, Google advertising went from $29 billion, which I thought was incredible. Okay, $29 billion in the ad business, just incredible. Now you're up to $50 billion in a quarter. Okay, this is a $200 billion run rate on a revenue side, and this doesn't include all their revenue. That's just absolutely fantastic. Now they got some Google Other here coming in. Would you like to have $6.6 billion in other revenue that they don't really break out individually? That's fantastic. Now we've got global services, Google services total that's coming in at $57 billion. We were at 35 the previous period. That's just phenomenal growth. Now, Google Cloud grew to $4.6 billion. Seeing the growth rate, that looks to me a shade over 50%, so still growing very nicely. We just did a Microsoft video where their cloud computing business grew 51%. Just off the top of my head, this is a shade over 50% as well growth. So you like to see that over at Google, other bets, and those types of things. Now, in terms of operating income, so obviously the ad business had basically $57 billion worth of revenue. They had $22 billion worth of operating income just on their services side of the business. That's obviously fantastic margins. I mean, almost half, not quite half, really closer to a third of it is flowing down to the operating income side. Now, Google Cloud loses money. Okay, you lost $1.4 billion on it in the previous period, down to $600 billion. You'd like to know maybe why they lose that money. Is it because they're offering their services at a discounted cost to maybe an AWS or a Microsoft or an IBM, that type of thing? And that is partially why they're seeing this type of growth. That's potentially why, or they're just scaling that business up. They're advertising a lot, those types of things. They're really trying to make a lot of money. Well, that could be a reason for it as well. And you got other bets, basically every other segment in the Google business loses money, but the ad business makes so much money that it doesn't really matter, at least in the shorter and probably longer term. Now, from a balance sheet perspective, as you can imagine, Google is absolutely phenomenal. The left-hand column is the beginning of the year, basically, and the right-hand column is 6 months into it. We have $135 billion worth of cash, and we had about that at the beginning of the year. All things being considered, total assets up marginally, but not a whole lot to see there. From the liability side, you do have a little bit of long-term debt sitting at $14 billion, but total liabilities on this company, total liabilities, everything. If Google wanted to pay off every bill it has, imagine being able to do that. Pay off your car, pay off your house, pay off all your credit cards, every loan you've ever had, and even more, and even loans that, things that are due in the future, your entire mortgage. Think about that for Google. They have $97.8 billion in total liabilities and just in marketable securities. Okay, not all their cash, just in marketable securities, they have more than that. And they'd have over $30 billion left over and another $32 billion in money that people owe them. So it's just phenomenal. This is why when you see all the focus on the major FANG stocks, okay, there is a reason every single Friday on this show, we go over all the FANG stocks. It is not because those are the stocks that get me the most clicks and most views and make me the most money. I could pick lots of other stocks every week to cover that would do that. The reason why I cover stocks like this on a weekly basis, Google in particular, is because these companies are so financially healthy. They're so financially healthy from a revenue and profit perspective, financially healthy from a balance sheet perspective. When you want to look at them from cash flows, which I don't necessarily think you even need to do. When a company has just absolutely amazing net income numbers, $36 billion year to date, $36 billion worth of net income. Most companies will not do that in 10 years. And those are big, gigantic companies. Won't do that in revenue for 10 years. Okay, Google does that in net income year to date. Okay, off $117.2 billion worth of revenues. Now they have these costs of revenues sitting at $50 billion. There's research and development coming at $15 billion. You see year over year, we're seeing some growth here, but when you went from $80 billion in revenue up to 117, you'd expect some growth here on the cost and expenses side. The total cost and expenses actually went from $65 billion up to this $81.4 billion. That gives us income from operations sitting at $35 billion. So off $117 billion in revenue, again, this is year to date. This is basically 6 months in. After you pay all your expenses, all your costs, all your expenses, you cleared $35 billion. Again, I could cover lots of stocks here on the channel and lots more that could give me more views, more clicks, more quote unquote popularity here on YouTube. I don't do that because these are the stocks you need to invest in. And I'm showing you why here in the numbers. Go pull up whatever penny stock or whatever high flying stock that you want and look at the revenues and how much it flows down to the income from operations. Will it look as impressive as this? I highly doubt it. And from a net income perspective, I don't necessarily focus on net income because look how weird this is. Okay, income from running the business came in at $35.8 billion, but net income was actually higher than that. Okay, so imagine that after you provision for income taxes and those types of things, you actually have higher income than what you had on the operating side. Again, other income comes into play. This is income that doesn't necessarily reoccur over at Google. So that's why it can impact that. That's why I tend to focus on income from operations rather than coming all the way down to the net income side. Obviously, when you take Finance 101, they'll really focus on this net income number and they'll make it seem like it's the most important. Really, I think you could stop here at income from operation and get more value. That's just my my old school finance hat on display there. Now, in terms of cash flows, everything's looking really super strong over at Google. As you can imagine, you pull down a $36 billion net income number, and guess what you get to do? Add back in depreciation, add back in stock-based compensation, add back in deferred income taxes, which I guess makes a little sense. You got $41 billion net cash provided by operating activities in just 6 months. That is nearly, not quite a double over last year, but we were sitting about $25 billion. In the most recent quarter, they did nearly $22 billion net cash provided by operating activities. That nearly exceeds the 6-month total of last year. It's just unbelievable, these numbers. Everything else is about what you'd expect. They repaid some debt. They repurchased some stock. As you can imagine, that can help a stock like this go on a hard rally like we've seen, because look, over the last 6 months, they purchased $24 billion worth of the stock. Just over the last 3 months, $12.8 billion. So they're retiring a bunch of shares over at Google. Now, moving over to the stock chart, and I promise you this is not going to take long. This stock has been locked up in an uptrend really since October, November of last year, and it has not wavered. It's wavered a little bit, a couple times along the way, and every single time that has proven to be an opportunity. Now, in the after-hours session, I drew this top line in. This is not a lid on the stock. This is actually showing you where the stock is right now. The stock is actually on this big red line, sitting about $2,717 per share over at Google. And I am quoting the GOOGL number. So if you notice that this is higher than the GOOG number, that is because there are two different tickers and they have two different prices, because I think there's some delta on the voting rights and those types of things. But all things being considered, this thing is locked in an uptrend. It's near the top of a channel, which usually, not all the time, but usually if you get to the top of the channel, notice we've gotten to the top of the channel and even over it in some cases, and you can move this channel around. Maybe it's up here, maybe it's down here, I don't know, but it's somewhere in this ballpark. You're at the top of the channel. What does that normally do? Trigger a little bit of selling down to the bottom of this channel. And so if we hit, if and when, and I think it's more of a when than an if, but at some point Google stock is going to come down here and hit the bottom of the channel. If you want to step in there and buy, that has worked like clockwork since October. Now, if you want to try to get this at a much lower price, which on these kind of trends is tough to wait for, but usually you get an opportunity. You're really looking for a breakdown here, down below 24.50. That is like over $250 where the stock is today. So whether or not you get that, I mean, that's like nearly a 10% move at this point with Google. That would have broken this low here, and that would at least temporarily have broken this uptrend. We have not even come close to seeing that. And so in the shorter term, intermediate term, I would expect Google stock to continue to go higher. Any dip in share price for virtually any reason has been a buying opportunity over the last several months, headed back into last year. That wraps it up on today's video. We'll be back again with more soon. Be sure to join me on Fridays where we recap all the FANG stocks, including Google. Anybody who's followed the advice that we've done on that channel, probably been doing pretty good. So hopefully, guys, enjoyed today's video. We'll be back again soon. Good luck with your investments.